Most people believe climate change is a global tragedy with no winners, a slow-moving disaster that harms everyone equally. Rising seas, burning forests, collapsing ecosystems, it feels impossible that anyone could profit from this chaos. Yet hidden beneath the headlines is a disturbing mystery. While entire populations struggle to survive climate shocks, a relatively small group of corporations, investors, and financial institutions are quietly accumulating massive wealth. The real question isn't whether money is being made from climate change, but who is positioned to benefit, and why the same pattern keeps repeating throughout history. To understand how this happened, we need to step back to the early warnings. Climate change did not arrive suddenly. For decades, scientists issued increasingly urgent alerts while governments debated timelines, costs, and political risks. During those years of hesitation, global financial systems continued to reward extraction, growth, and short-term returns. Fossil fuel companies thrived, generating enormous profits while funding doubt and lobbying against regulation. Each delay created a clear cause-and-effect outcome. Emissions rose, profits surged, and the eventual damage was pushed onto the public rather than the companies responsible. As climate impacts became undeniable, a new phase emerged. Disasters grew more frequent and severe, and with risk came opportunity. Insurance companies raised premiums or withdrew from vulnerable regions, while reinsurance firms charged record prices to absorb global climate risk. Investment funds began acquiring water rights, farmland, and energy infrastructure, betting on scarcity. At the same time, carbon markets were introduced as solutions, designed to put a price on pollution. In practice, many of these systems evolved into complex financial tools where emissions could be traded rather than eliminated, turning environmental harm into a speculative asset. The breaking point arrived when governments finally moved climate action to the center of economic policy. Trillions were pledged toward clean energy, electric vehicles, batteries, and infrastructure. On the surface, this looked like a turning point. But cause and effect played out predictably. Subsidies flowed to those with scale, legal teams, and political access. Large corporations captured incentives, smaller innovators struggled to compete, and entire industries consolidated around green branding without fundamentally changing power structures. The transition created wealth, but it did not distribute it evenly. The fallout has been profound. As climate disasters escalate, inequality widens. Wealthy coastal areas are fortified with public funds, while poorer regions are abandoned by insurers and lenders. Food prices rise as agribusiness secures climate-resilient land, pushing small farmers out. Energy transitions raise short-term costs that hit ordinary households hardest. Climate change doesn't just alter weather patterns, it reshapes who holds security and who absorbs risk. Attempts to fix the system have repeatedly fallen short. Carbon offsets fail to offset. Net zero pledges lack enforcement. Green investments are marketed aggressively while emissions continue to climb. Each failed solution deepens instability, and instability itself becomes profitable. The cycle reinforces itself. Crisis creates volatility, volatility creates markets, and markets reward those already positioned to win. Today, the pattern is clearer than ever. Climate investment funds rival national budgets. Disaster-linked bonds allow investors to profit when catastrophes meet specific thresholds. Water scarcity, once unthinkable as a commodity, is increasingly financialized. The same historical rhythm repeats: warning, delay, monetization, consolidation. Climate change has evolved from an environmental emergency into a permanent economic engine. The first lesson is that climate change is not only an environmental failure, but an incentive failure. When profit is separated from responsibility, damage becomes scalable. The second is that green solutions can reproduce the same inequalities as fossil fuel systems if accountability is absent. The third is that the greatest danger isn't that people are getting rich from climate change, but that the system rewards slow, incomplete action. The warning is unsettling. If climate response remains driven by profit rather than prevention, the crisis won't end. It will simply become the world's most reliable business model. The open question is whether humanity will redesign the rules of the economy or allow those rules to turn climate collapse into a permanent industry. If you want to understand the hidden forces shaping power, money, and the future, subscribe to the channel because history is rarely driven by accidents and never by chance alone.